Yo, what's up, guys? Today I'm going to do a top down analysis on DXY and Euro dollar. So I will start by US dollar index. This is US dollar index monthly chart. And here you can see that I have taken this range. So this is the higher time frame range, and this is the mid of this range. As you can see, it was resistance for twice. Price deviated above it, came down, deviated, came down. So once it broke it up, it made some inefficiency and fair value gap on monthly time frame on here. So this is monthly fair value gap on euro dollar, as you can see here. And what price has done is it went into this fair value gap and filled some of these inefficiencies. So it it shows that price can either pump from here or it might go lower to this line, and after that it will start going up. So DXY is currently at above this support area, and it can start going up from this level on the monthly time frame. Now we go to the weekly time frame. You can also see that this low is important, and it is a key level of support. So, and if it doesn't hold, the next one will be this here, which is also the weekly order block. So this was a consolidation before this rally, and if this area doesn't hold, price will go here. So what happens on DXY? I will expect that it will go lower. If it manages to close any weekly or monthly candle above this line, I will expect lower prices for DXY towards 99. So this is my expectation on the monthly and weekly time frame. Now we go to the daily time frame. On here you can see that in daily time frame, uh, price has been touching this level for twice, and it actually did make a higher high above this level. So what I do, I take from this low to this high and make it a range. So this is the lower time frame range that I will be playing, and as you can see on this daily time frame range, price has taken out this sell side liquidity. So it means now it can pump up and take this liquidity above this highs, which is also internal liquidity, and it might start going up and farm a higher high and take this buy side liquidity. So this is the daily time frame, and the last down move was this one. So if I take, so I don't go to so much lower in on DXY, and I will do that on euro dollar. So this is the daily time frame of DXY, and it's currently being supported on this level and can go higher. One thing more I would like to add is after this SFP or turtle soup on DXY, you can see that it closed a bullish engulfing candle. So this down candle flips into order block, and price has almost tagged this level today and is rejecting from that level. Now if we go to the 4-hour time frame, on the 4-hour time frame you can see that the last up candle before this down move was this green candle, and now this green candle has flipped into breaker block. So this breaker block is currently level of support for DXY, and that's why DXY is uh, starting to come from this level. And if you go to the hourly time frame, you can also find that this down candle, or probably this one that has body, it was once as a support area here, and now it's acting for the second time. So this is an important order block, and this one is breaker, and we might see some pump from DXY from this level, and it's visible right now also. So if it makes a higher high, it can go take this highs and liquidities. If we take this highs, we can form a trend line, and above this trend line, there's liquidity. So my plan for DXY is as long as this green zone, this order block holds, DXY can pump and form a higher high and take all this internal liquidity on here and target this mid-range. So this is the plan for DXY. And now we go to the euro dollar. This is the euro dollar chart monthly time frame. As you might have watched my previous video on euro dollar that I did a top-down analysis, on that video I said that on the monthly time frame this was the down candle before this up move, so this is the order block, and now that the price traded below this order block it flipped to breaker. So for a breaker we take the body of that to act as a resistance or support area. Now you can see that this breaker block is currently acting as a resistance area, and we haven't and euro couldn't close any monthly candle above that. So as long as this holds the price and doesn't let the price close any monthly candle above this level, I will expect that this will be a resistance area and euro might start going lower. But if it closes any weekly or monthly candle above this breaker block, then the next target will be definitely this level. This one. And if we take from this swing high to this swing low, this is the mid range, and this level will be 62 level of Fibonacci. So for now I remove this one, and now we go to the weekly time frame. On the weekly time frame you might see that we actually had a order block, bearish order block here, and this weekly candle closed above this, but it was not much strong. As you can see, it made a wick by tagging the liquidity from this high. So I will wait for this weekly candle how it will go, and if it closes bullish, then the next target will be this level. So this is the weekly and monthly plan, but for now I think this level of resistance will hold the price, and as I said on the DXY chart, you might see some rejection to the downside, probably to this weekly order block, and after that maybe it goes higher. So this is the plan on euro dollar. And now if we go to the daily time frame, what can we find here? On daily time frame, you can see that it has flipped this downtrend into bullish trend, and euro has been uh, in a in an uptrend afterwards. So the last low and high is this low and high. So I take this low to that high and form a range. So this is our weekly and daily range. And here you can see that price couldn't close this daily candle above the range high of this level, and it got fully covered by this down bearish candle. So it means that price has deviated from this range high and took liquidity from this high, buy side liquidity. It means that as long as this range high holds and it was a grab of liquidity, price can come back down, take this internal liquidity and tag at least the equilibrium of this up move leg, which is here, and after that it might start pumping again, going higher, or it will go and take this sell side liquidity from that level and probably this level. So for now the plan is, as long as this range high holds the price, we should be looking to target this low this level of equilibrium. And as you can see that there's a trend line liquidity also. So one thing more I would add is this up move was covered by this down candle, so this can be our bearish order block. Now if we go to the 4-hour time frame, on the 4-hour time frame you can see that this up candle is our order block, and now we go to the hourly time frame. We can define it to this block. So price tagged almost tagged this order block, went down, and it for the second time it pumped and tagged this level and is going lower. So if uh, there's a probability that maybe the euro dollar comes once more higher. Why? Because there's inefficiency and liquidity. It might come higher and take them out and then go lower, or it will go lower from here and take this liquidity and this level. But if it comes higher and flip this level as a support and go higher like the and flips this range high also as a support area, then it will be bullish and it will go higher for that level on the monthly and weekly time frame. So currently it is bearish and we will need to see how it will react to this range high. If it goes above this, then it will go higher. And one thing more I want to add is that the last up move is this one. The the last bullish leg, this was the low, this is the high, so I take it to form a range. Change the color into blue. So this is the lower time frame range and the last bullish leg. As you can see that this is the equilibrium and this probably the 62% of Fibonacci. This down move was caused by this consolidation, and now price went up above this, so this flipped into breaker block, this level, and this breaker block is currently acting as a support area for euro dollar. So it came to this level and pumped up, and if this equilibrium holds and doesn't let the price go below that, maybe euro dollar will go higher, take this liquidity, and after that go to this level. And we will see how it reacts to this level. Either it pumps higher or will come lower. So we played level to level, and as you can see on the lower time frame, it's in a bullish trend and it keeps making higher low, higher highs, and we need to see when it changes the character by going below these lows, and after that it might turn into bearish. But currently it's bullish and we will play it level to level. So I shared my higher time frame levels and opinion, and lower time frame range is this one. This is the breaker block that got tagged. So currently I have a short from this level to I'm targeting this level of consolidation. If it stops me out and goes above this level, it will probably go to this range high. So after this, we will see if it can continue the uptrend. This was the top-down analysis that I wanted to share with you guys. I hope you enjoyed this. Have a good day.